July 5th, stock playbook. Dow Jones down 12 points, 0.1%. NASDAQ Composite rose 9 points, 0.3%. S&P 500 down just shy of 2 points, 0.1%. I get a lot of, I'm getting emails now from people who are sending me emails, dave@thestockplaybook.com, regarding, hey, I didn't get updates. What are you doing with Netflix, short, things of this nature? This is just a sample video, okay? We do this every night. We give our clients, we do webinars, we do strategy sessions. I can't go ahead and post in hundreds of rooms what I'm doing on a daily basis, but Netflix, a stock we liked as a short. Our subscribers were told to either use a stop loss or to go ahead and hedge themselves by buying some upside calls. We did this when the stock was down in the 250 area, in hopes of the stock rallying up to the 270 area where we could short it and have a free run at it. We bought the 270 calls for $4 and change when it was down here at, on this sell-off. Then when it came up, we shorted. Our downside was capped at $4. People say, how is that possible? Well, our short position is down $19, but the call we bought for $4, it's up to 21. So we're up $17 on our option. We're down 19 and change, on the short of the stock. So that's how you use a call option as a hedge. Now, if you exercise or you buy the call option as a hedge the same time you short the stock, you're going to pay more money. But even then, you could have got an insurance policy for less than $8-9 a share. Nobody should lose more than 4 or 5% on a play like Netflix. Now with the July options, we got until next Friday. I got another 4 days. I'm short the stock. I don't care if the stock goes to 350, 400, 800. I'm not going to lose any more money than I've lost already. I have a hedge in place. If the stock falls, I'll lose the money that I made on my hedge, but at the same time, I'll make back what I'm losing there on my short position. So that's how you run a hedge portfolio. What are you doing today? Well, I'm getting questions. What do you think? Is the market ready for another leg higher? No, I didn't see any volume. I didn't see any volume across the spectrum. I thought we'd see a little more than we saw today, but people are gonna just straggle in. We're gonna keep an eye on it. It hasn't moved up. Let's see. I think both sides, the bulls and bears, need to prove themselves. Bulls had a nice 5.5-6% run last week. So it would make sense that at the very least we should get a pullback and test this 50-day moving average. That's why I think the S&P E-minis, shorten them up here with a real tight stop in place, a couple of points. I think it gives you a real nice risk to reward setup. Outside of that, you just continue to build up your watch list, whether it's stocks like, FIO, Sequence, SQNS, Travel Zoo, ZAG, which we mentioned, last week. These stocks all continue to work and look good. One that's starting to pop on my radar, Google, is emerging from this downtrend, showing some decent activity to the upside. I wouldn't chase it, but this is the first sign of any real strength since the stock rolled over back in January. So now you put it in the keep an eye on it category, let it pull back, and then as it pulls back and pulls in towards that 500 level, if the market rolls over, we'll buy it with a real tight stop at, new lows, say around 470. If it doesn't pull back, we just let it go. There'll be plenty of other ideas. We'll find some. The idea is to go ahead and find setups that give you, a lot of upside risk with a very defined downside. That's it for the playbook for tonight. I hope you guys liked the sample. If you want to see more of what we're doing on a daily basis, check out our website, www.thestockplaybook.com. Sign up for a free trial. Talk to you soon. Bye.